All right, so let's go ahead and hop right in. So we are talking about $100 a day scalping best practices. The first thing that I want you guys to know is that to make $100 a day or any amount, you have to be properly funded in the market, meaning you have to have the proper capital to know exactly how much you need and also how much you want to make. You have to have a plan. So most traders go into the market, they don't have any type of plan or execution behind it. They just put their money in. They're excited to press that buy sell button and they don't really know exactly how to trade. And if they think they know how to trade, they realize eventually that they don't know what they're doing and they really need some help. So you want to make sure that you get the proper education, the proper skills, and then you want to have the proper capital. Now, how much do you need to make $100 a day? In my opinion, about 5,000 to 8,000 is an ideal amount to make about $100 a day where you're utilizing proper risk management. You're not going to be stressed out. So you might be asking, well, what's a good risk factor to use if, trying to make $100 a day? Regardless, we teach our traders not to risk more than 1 to 2% of their overall account balance. So you're going to hear some people, stress that risking 2% per trade is acceptable. And to me, that's not acceptable because 2% per trade, what's your max? Where's your cutoff? A lot of traders don't understand that, and there's nothing really taught around that. So you have to really find a risk management technique that works for you, especially as a scalper, because this is a technique that really requires skill and you have to be a quick thinker. You have to be able to cut losses quickly. And if you don't do that, then you're going to end up with a lot of losses. So let's talk about it more in depth. We're going to get into an actual risk plan. And also, I'm going to just go ahead and break down for you some things you want to keep in mind. So number one, you want to be properly funded. Number two, I recommend to know your risk before you actually get into a trade. So how will you play defense if the market goes against you? What if you're wrong? What's going to be your technique or your strategy to recover if you are wrong? Okay. When you have a really small account, that's hard to do because you have a lot of limitations. You might have to cut losses really quickly versus someone with a larger account. They have a lot more benefits because they can play defense and create different scenarios that if they're wrong, they can still recover and come out profitable. Another thing, number three, is that you want to analyze from the higher time frames. Now, what I mean by that is currently I'm on Euro USD. This is on the 15-minute time frame. As you can see here, we have an uptrend on this 15-minute time frame. So maybe your directional bias on the lower time frame is in an uptrend. However, you don't want to start here on the 15-minute or on the 5-minute because it can be a little bit deceiving. So some areas might be clear to you, but some levels might be very deceiving. So for example, you can see right here, we had a resistance area on this 15-minute time frame. And the market did give us a move downward from here. Notice when it came back to the level, we had a rejection candle here, but eventually it pierced through the level. Look here where we had an area of resistance, and look how the market pierced through that area and continued to make a higher high. So a lot of traders will sell into areas like this because they think that this is a strong reversal area on the 15-minute when actuality it's really not. So you want to start on the higher time frame. I recommend at least the daily for scalpers. So for example, let's take a look at the daily of Euro USD and let's just see what we're seeing. So one of the things that I like to keep in mind is where price is relative to where it's going. Also, are we near any historical highs, historical lows? Do I see any type of patterns that stick out to me? Because that's going to help me make a really good decision on the lower time frame. So as you can see here, Euro USD is pretty much bearish. It's very bearish right now. And even if we go out to the weekly, we can see that. We can see confirmation of that, right? See how long this market has been falling, right? We even had a double top here on the weekly. It completed the pattern here and continued to break lower. So considering that, now that the price is so low, one of the things I definitely want to keep in mind is how long has it been this low, or when was the last time it was this low? What did I see happen years ago or months ago when it was at this level before? Those are all things you want to pay attention to because that can help you make a prediction on the lower time frame. So as you can see here, this actually was a level that I was watching and waiting for the price to come to when I knew that I wanted to get long, because I knew that, hey, you know what? The price is on sale. It's at a strong demand level where I believe buying pressure is going to come in and push that price up. And if I am wrong, then I can set a really good risk to reward ratio in this case, in my opinion, because the price has not been here. It's never been this low. Okay. So or lower than this actually. So those are all things that I like to pay attention to. The way that I'm analyzing, I think, comes with time and experience, and also I would say education, mentorship, all those things that you couple together to become a more successful trader. Basically, you want to start on the higher time frame, work your way down. So on this daily time frame, you can see that the market has given us a low into this demand support. It pushed up, broke above this previous high, formed a resistance at a previous area of support, bounced here and went back down to the downside and gave us another low here, giving us a double bottom. So anytime I see double tops and double bottoms, which is one of my favorite chart patterns, I'm always paying attention to that and knowing that, you know what, the market could possibly reverse up. And because this is at a very strong demand level, then, and we're seeing, possible buying pressure come in, absolutely, that's, according to technical analysis, this is something that could very well happen. Now, I'm also paying attention to fundamentals as well. You may not be a fundamental trader, but over time, I truly do encourage you to develop a passion or interest for fundamental trading, knowing high impact news and how that affects currency pairs in the market and the outcome or reaction of traders. It can really help you with more successful outcomes. So considering that this is a double bottom on the daily, prices on sale, it's at a discount. Also, USD currency is becoming stronger because of what's going on in the economy right now. Not that it's all great, but we did have an interest rate increase, and that stabilizes the currency. It strengthens the currency. So we actually saw some reaction from that. Now, I'm going to be focused on my levels. So now that I've really analyzed from the higher time frame and I can form my directional bias, overall, I am still bearish until this bearish trend is broken. Okay. So I am still bearish until this bearish trend is broken. So this is my trend on the daily. Now I'm going to focus on exactly understanding my levels from the higher time frame of where should I trade. So one level that I see right now is right here. This is an area of previous resistance. And if I scroll out, it was also probably previous support on the weekly. Let's just see. There we go. You see that? So previous support, previous strong weekly support, and now it's forming resistance on the daily time frame. So now that we see that, I'm going to go down to the daily. This could have been an area that I'd want to keep my eye on in case the price comes here. Right now, I actually have an alert set at this level to let me know that, you know what, once the price gets here, then I will possibly be interested in a potential short. Now you can see it's not quite there yet. You can see that this was actually a previous support zone. This was previous resistance, and this is also previous daily resistance. And notice where the candle is right now. So sometimes, when you're trying to plan that perfect entry, you have to pay attention to the wicks because it might not actually get to the level all the way. So you can see where these daily candles are right now, and look where the price is rejecting, though I have an alert right here at about 0633 or 35 area. Okay, so you can monitor it if you want, and you can apply your rules and determine how you want to get into that trade. But the main thing I want to help you understand that when you are going for these consistent profits per day, you want to be trading from the best levels as possible, and you want to be patient and let the price get there. So if we were to trade this, what I'm looking at, to be honest, I'm just going to clear all of this. Now, I like to look at the strongest areas of where to trade from. And notice here that when the price got to this area of resistance, look how much it fell. Now, this is on a daily, right? So if I'm a scalper, this is definitely some price action that I'm going to be paying attention to right here at this zone. Notice here from this level, look how much the price dropped. And when it came back to this area, look how much the price dropped. So as a scalper, we're only in the market short term. We're going for about maybe 10 to 20 pips at a time, maybe trading multiple positions. That's more than enough for us to trade. So I will be keeping my eyes on these levels right here. Now, preferably, this would be my level of preference to trade. Okay, I like this. And I'm also a swing trader as well. So more than likely, I would swing a level like this based on how the price reacts when it gets here. But I'm also keeping in mind that there is a double bottom here. So when the price gets to this area, I'm going to be watching to see if bulls are strong coming into this resistance area, because we just might get a break. And if we get that break, what we could see is something like this. It breaks above. It gives us a potential retest, maybe not, because we don't always get a retest. And then we could see more growth to the upside. So that could be a potential scenario that plays out. But until that happens, I'm going to remain bearish until we get a break of that resistance, okay? So this would be an area that I would definitely plan to scalp from. And then I'm gonna also keep my eyes on where the current price is and where it's coming back to retest that previous resistance, also previous support. And you can see we're getting some reaction there. So the main thing when you are making your $100 a day, $50 a day, $500 a day, whatever it might be, you always want to have very specific rules that you follow, but analyzing from the higher time frame and really forming your directional bias, understanding levels, being patient and waiting for the price to come to those levels are best practices that you want to implement into your trading plan. So remember, another thing too is that when you are establishing your directional bias on the higher time frame, a lot of times it's going to be opposite on the lower time frame. So for myself, for example, I'm going to get rid of this zone. So let's say if I were going to trade this level right here, once you actually jump down to the lower time frame, you're usually going to see the opposite happening. So I can guarantee you that right now, even though we're in a downtrend on the daily, you're going to see that on the 15-minute, we're in an uptrend. Okay, so we are in an uptrend. And that is what you're going to see. And that confuses a lot of traders. It takes time to really get comfortable with that. But you see how I had this as a sell zone, and look at this double wick rejection right within here, and look how much the price fell. But notice that on the 15-minute, we have an uptrend. This is our uptrend on the 15-minute. However, the directional bias on the daily is really what guides your success, because the daily time frame is always what's safe, because that is the time frame that's happening throughout the course of the day. You don't want to be trading against the daily time frame, because you can get caught trading against the overall trend within this smaller trend right here. So hopefully that makes sense. You guys comment below and let me know if this was helpful for you. Just remember, best practices for $100 a day scalping is that number one, you want to make sure that you are properly funded. Make sure you have the proper funds in your account when you're trading very small amounts. It's going to be really hard to be successful because you have to have such a buffer when you're trading as a scalper, because so many things can go wrong. It really is a technique that requires great skill. Number two, know your plan before going into the trade. Know your stop loss, know your targets, know your entry, and know how you're going to play defense. If you are wrong, how are you going to recover and still come out profitable? Number three, analyze from the higher time frame. As we discussed, starting out at least the daily, you're going to pay attention to where price is. You're going to pay attention to supply and demand levels, current price. Is price approaching historical highs or lows? Do you see any type of reversal patterns or continuation patterns that stick out to you? Those are all important for helping you to make wise decisions on the lower time frame. And last, always understand your directional bias and how you're going to approach it on the lower time frame. Know that when you are looking at the directional bias on the daily, majority of the time it's going to be opposite on the lower time frame, but you want to let the daily time frame or daily directional bias guide your overall decisions on how you enter on the lower time frame. So if you do have a bearish bias on the daily, ideally you want to be shorting on the lower time frames. However, if you are buying on the lower time frame and you know that there's a bearish bias on the daily, you're going to be going against the overall daily trend, okay? But if we are bearish on the daily, you have an uptrend on the lower time frame, yet you're shorting from a very strong level of resistance, you're going with the overall daily trend, which is safe. I hope this video was helpful for you guys. Comment below if you have any questions. If you are a new or struggling trader, I strongly recommend you check out our academy. We have awesome content starting from basics to advanced, and we help you get to where you need to be and guide your hand, answer your questions. You're never alone. Check out our Telegram below, and if you guys need anything else, feel free to comment below. You can get in contact with us. Our email is below as well, and we will look forward to seeing you in the next training video. Hope you enjoyed.